Hong Kong state-affiliated property developer China Vanke is expecting a net loss of as much as 9 billion yuan, $1.24 billion, in the first 6 months of 2024 as falling prices for new homes hit its margin. The Shenzhen-headquartered company has drawn the spotlight in the ongoing property crisis due to its association with state-owned Shenzhen Metro, which holds a 27% stake. Until now, much of the issues in mainland China's property market have been centered on private companies such as Evergrande and Country Garden Holdings, the latter of which had its credit ratings withdrawn by Moody's ratings on Wednesday. Whether Vanke can survive the downturn has implications for how long-lasting and widespread the crisis could be. Vanke's net loss was mostly due to a downturn in sales of projects that were built on land purchased at high cost before 2022, Vanke said in a filing to the Hong Kong Stock Exchange on Tuesday night. It delivered 74,000 homes and recorded sales of 127.33 billion yuan in the half-year. Vanke's Hong Kong traded shares closed 2.45% lower at HK $4.38, while its Shenzhen shares were down 0.89% to 6.65 yuan. Despite a coordinated rescue package announced by top Chinese regulators on May 17 in which local governments were directed to buy up unsold houses with the backing of a 300 billion yuan fund at the People's Bank of China, investor confidence has not returned. Property investments in China fell 10.1% in the first 5 months, the latest official data shows. In addition, Vanke had to mark down the book values of equity investments and commodities. Although the company has recognized the importance of transformational development at earlier stage, transformational business investments went beyond the boundaries of resources and capabilities, Vanke said in a statement. The company has been over-optimistic, resulting in relatively high land acquisition costs. The company deeply apologizes for the performance loss, Vanke added. Vanke said it had ensured repayment of open market debts on schedule in the first 6 months. However, it has suffered downgrades since late March, when Fitch lowered its rating by 2 notches to junk status BB+, from BBB. In May, the agency adjusted the rating 2 notches lower to BB-, citing questionable sales stability. Vanke's peer Country Garden lost its Moody's ratings on Wednesday due to insufficient or otherwise inadequate information to support the maintenance of the assessment. The final evaluations prior to the withdrawal were CA for the corporate family rating and C for the senior unsecured rating, with a negative outlook. Both S&P Global Ratings and Fitch Ratings had already withdrawn their ratings for Country Garden in November 2022. S&P cited the company's request, immediately following a 2-notch downgrade to B+ with a negative outlook. Fitch took a similar action the following day, for commercial reasons, withdrawing its final grade of BB- with a negative outlook. Country Garden has been suffering from falling contracted sales, a vital source of cash flow to repay its debts. For the first 6 months, the aggregate sales amount was 25.95 billion yuan, $3.56 billion, or 79.8% lower than the same period a year ago. Trading of the company's Hong Kong-listed shares has been suspended since the end of March, as it failed to disclose its latest annual results. Country Garden and some other Chinese developers face winding up orders by bondholders in Hong Kong courts. On Tuesday, Guangzhou RNF said its unit Trillion Glory had received a wind-up petition from a Singapore-based private equity fund for a loan amounting to $613.66 million. Those already in liquidations are facing difficulties in restructuring. Jiawan International Group said a term sheet proposed in March had lapsed on July 7, and Evergrande's liquidators said in late May that they had made modest realizations of assets. In a development on Wednesday regarding Evergrande's auditor PwC, Hong Kong's Accounting and Financial Reporting Council said it has found no evidence to support allegations raised by a group of self-claimed PwC partners in an open letter that the firm failed to maintain professional standards while keeping a client relationship with the Chinese developer. However, the quality of the auditing of Evergrande is under a separate investigation by the financial watchdog, according to the AFRC's evening statement.